Hello dear students, in this video we are going to cover the second tool of financial statement analysis, that is common size statement. Myself Professor Vaishali Bharat Gholab. See, common size statement is also known as component percentage. Okay, is a financial tool for studying the key changes and trends in the financial position and operating efficiency of the company or operating result of a company. In common size statement, each item is stated as a percentage of the total of which that item is a part. Okay. Each percentage has the relations of the individual item to its respective total. For example, a common size balance sheet shows the percentage of each assets to the total assets and that of each liability to the total liability. Similarly, in the common size statement of profit and loss, the item of expenditures are shown as a percentage of the revenue from operations, means percentage of the total of which that item is a part. Okay, common size analysis is of immense use for comparing enterprises with different substantially in size, as it provides an insight into the structure of financial statement. Here we find out the percentage to the respective total in that specific year. That's why it is possible to compare the different size of companies also. Okay. Also, it is possible for inter-firm comparison or comparison of the company's position with the relative industry is possible with the help of common size statement analysis. And common size statement analysis is also known as vertical analysis. Okay. We are going to see this common size statement with the example of profit and loss statement as well as balance sheet. This is problem third, because by sequentially this is the third problem. In previous video we have covered the two problems of comparative financial statement. In this video also we are going to cover the two problem on common size statement. Okay, that is second analysis tool for financial statement analysis. Okay. From the following information, this is the problem actually. From the following information, prepare a common size income statement for the year ending March 31st, 2016 and March 31st, 2017, because 2-year information is given. What is the given information? Revenue from operation, cost of goods sold, operating expenses, non-operating expenses, depreciation and wages. This is the given information. From this information, we have to prepare the common size income statement. Okay. First, remember, we have to write down these particulars as in the we can write in the profit and loss statement, or we can say the income statement. First of all, we have to write down, or we are going to find out the percentage with the revenue from operations of each and every item of the profit and loss statement or income statement. First of all, revenue from operations. Again, here 2016-17 and 2015-16 is given. While preparing the common size statement, we have to first of all write down the previous year and then we have to write down the current year. Okay. That's why here I have written 2015-16 and 2016-17. Now revenue from operations as it is, which is given in the problem, that is 25 lakhs and 18 lakh. Then we have to subtract the cost of goods sold. Then we will get the gross profit. Okay. Cost of goods sold for the 15-16 is 12 lakh, 16-17 is 10 lakh. By subtracting the cost of goods sold from the revenue from operation, we will get the gross profit. Gross profit for the year 15-16 is 13 lakh and 16-17 is 8 lakh. When we subtract operating expenses from the gross profit, we will get operating income. Okay. Operating expenses 1,20,000 for the 15-16 and 80,000 for 16-17. Then we will get the operating income as 11,80,000 for 15-16 and 7,20,000 for 16-17. When we subtract non-operating expenses from operating income, we will get the net profit. Okay. What is the main aim of preparation of income statement or profit and loss statement? That is to calculate the net profit or net loss. That we have find out. That is net profit for the 2015-16 is 11,65,000. and for 2016-17 is 7,08,000. From this information we have to find out the percentage of net sale. Okay, that's why we write in first row for 2015-16 is 100 and for 2016-17 as 100, and we try to find out the percentage with the revenue from operation. Okay, this is 48%. How we calculate? See, 12 lakh divided by 25,000 into 100, we will get 48%. Similarly, 55.56%, 10 lakh divided by 18 lakh into 100, we will get 55.56%. Means what? The cost of goods sold for the 2015-16 is 48% of the revenue from operation, and similarly for 2016-17 the cost of goods sold during 2016-17 is 55.56% of what? Percent of revenue from operation. Similarly, we have to find out the gross profit. Again here, 13 lakh divided by 25 lakhs into 100, that is 52%. Then 8 lakh divided by 18 lakh into 100, that will give 44.44%. Again here, 52% is a gross profit for the 2015-16 of what? Revenue from operation. And similarly, 44.44% is a gross profit on revenue from operations for the year 2016-17. Here we find out the percentage with the respective total of that statement, or in case of income statement or profit and loss statement we find out the percentage with the total sale or net sale or revenue from operation, and in case of balance sheet and income statement we find out the percentage with total asset and total liability. Now operating expenses again 4.8% for the 15-16 and 16-17 is 4.44%. Operating income is 47.20% and 40%. Non-operating expenses 0.6 and 0.67%. And net profit, the contribution of our percentage of net profit for the year 2015-16 is 46.60% of revenue from operation. And for 2016-17, net profit is 39.33% of revenue from operation. Okay, this is the calculation of common size income statement. Here we have not considered the wage and depreciation. Why? Because wages is the part of cost of goods sold. That's why we have not write here wages and wages part, because wages is the part of cost of goods sold. Okay, wages are the direct expenses. That's why we that is already considered in the cost of goods sold. Similarly, depreciation we have not write down separately because depreciation is a part of operating expenses. That's why here depreciation is the part of operating expenses, and operating expenses is given, that is 80,000. Means this 20,000 is already included in the 80,000, or 40,000 is already included in 1,20,000. That's why we have not mentioned separately wages and depreciation in this common size income statement. Now this is analysis part. Now we have to interpret the result of this common size income statement. What will be the interpretation? See, interpretation by critically observing this analysis, because financial statement analysis include two things, that is analysis and interpretation. Okay, and in analysis we simplify the data, and interpretation we have to find out some concluding remark on that analysis. Okay, for better decision making. Okay, what will be the interpretation? See, the cost of goods sold have increased from 48 to 55.56% from previous year to current year. But gross profit, operating profit and net profit, you can see gross profit, operating profit, or gross profit, operating income and net profit is decrease from the year 2015-16 to 2016-17. What it indicate? Which indicates unfavorable operating efficiency of the company. That is the interpretation of this common size income statement. Okay, clear? Now we are going to see the second problem on the common size balance sheet. See, this is the problem. Prepare the common size balance sheet of XRL Limited from the following information. This is the balance sheet is given. Balance sheet include equity and liability and assets. Okay. Equity and liability include shareholders fund, share capital and reserve surplus, non-current liability, long-term borrowing, current liability, trade payable are given for the specific year 2016 and 2017. Also asset, non-current assets and non-current assets include fixed asset, again fixed asset, tangible and intangible, plant and machinery, intangible goodwill, non-current investment is given, then current assets inventory. This is all equity and liability and assets for the 2 years, that is 2016 and 2017. From this information we have to prepare the common size balance sheet. This is the solution of common size balance sheet of XRL Cooperative Limited as at March 31st, 2016 and March 31st, 2017. First of all, we have to write down the all particulars items in the first column, that is equity and liability. Equity and liability, first of all, we have to write down the shareholders fund. Shareholders fund includes share capital and reserve and surplus. That's why actual given information is mentioned in second and third column. Okay, now fourth and fifth column represent the actual calculation of common size statement. Okay, as I have already told you in previous slides that in my profit and loss statement we find out the percentage to the revenue from operation or net sale. Similarly, in case of balance sheet we find out the percentage with the total equity and liability and total assets. Okay, see, for the year 2016 the shareholders capital is 15 lakh and 2017 is 12 lakh. Now here we find out the percentage with the total asset, total liability. Okay, total liability here 36.40%. How it calculated? See, 15 lakh divided by 41 lakh 50,000. I will repeat, 15 lakh divided by 41 lakh 50,000 into 100, that will give 36.14%. Similarly for the 2017, 36.93% means for what? That is 12 lakh divided by 32 lakh 50,000 into 100 means what? Share capital for the year 2016 is 36.14% of the total liability of that year. Similarly, for the 2017, the share capital is 36.93% of the total liability. Okay. Now, reserve and surplus again 12.05% and 15.38% of what? Total liability of respective year only. Okay. 5 lakhs divided by 41 lakh 50,000 into 100, that is 12.05%. Similarly, 5 lakhs divided by 32 lakh 50,000 into 100, that is 15.38%. Again, I have written here total shareholders fund. From this, we easily identify the what is the share of total shareholders fund in total liability. That is 48.19% is the shareholders fund out of total liability, and for 2017 that is 52.31%, near about 50% is the total shareholders fund for the 2017 year. Now long-term borrowing again 14.46% means 6 lakhs divided by 41 lakh 50,000 into 100. 15.38% is the long-term borrowing. And total non-current liability same, because there is only one component is given under non-current liability. Then current liability. Current liability include trade payable. Trade payable is 15 lakh 50,000. Similarly, total current liability is 15 lakh 50,000. Okay, that means total current liability is 37.35% of total liability for the 2016, and for 2017 that is 32.31% of the total liability. Again here we find out the total liability. Total liability means non-current liability and current liability. Okay, that's why addition of 6 lakhs plus 15 lakh 50,000, that is the total liability. We find out the share of total liability in total equity and liability. That is here 51.81% is the total liability of total equity and liability. Here 47.69%. Similarly again here also we have to find out the percentage of the component of assets with the total assets. Here 33.73% of the total assets. 14 lakh divided by 41 lakh 50,000 into 100, that is 33.73%. Again for 17 is 24.62%, that is 8 lakh divided by 32 lakh 50,000, that will give the 24.62%. This is in the percent and this is the absolute figure. Okay. Now we have to interpret this analysis. Okay, this is the analysis part. Now we have to interpret this result. What will be the interpretation? By critically analyzing this common size balance sheet, we can interpret the total shareholders fund have increased from 48.19% to 52.31%. Long-term borrowing also increase from 14.46% to 15.38%. Total current assets have also increased, but total current liability decrease. You can see here from 37.35% to 32.31%. From this, we can conclude that it shows the satisfactory financial status of the company. This is all about the common size balance sheet. Thank you.